Welcome back, traders. Now I want you guys to pay attention to everything that I'm about to share with you in this video on how you can cash and avoid spike on bull monters or index market. All right, now let's get on with the market. All right, now we're seeing that there's a lot of spike in this market, right? To cash spike accurately on bull monters or index, what you're going to do is to put in, we're going to be using about three indicators, which is the relative strength index, which that's the RSI, the MACD, and the MAO, which is the moving average of oscillator. So we're going to put on the RSI first, the relative strength index on period 14, applies to close, the level 90 and the level of 10, the style right here on 1 pixel color white. As you can see right here, you remove the sell and the buy. All right, then the style, you put that on 4 pixels color black. Then you click on done. Then you put in the MACD second, fast EMA 14, slow EMA 24, MACD SMA on 10. Then the style, you put that on black for the main. The signal, you put that on red. All right, with 4 pixels for both of them. Then you click on done. Then the third indicator we're going to put is the moving average of oscillator, which is the MAO, the moving average of oscillator. The fast EMA on 12, slow EMA 26, MACD SMA on the level of 9. You apply to close. The style, you put that on 4 pixels with the color green right here. Okay, or you can use any color of your choice as long as you understand the parameters which you are setting. Okay, now this is how you are going to catch spike on this type of market accurately. Now if you take a look at this point right here, there was a spike, right? If you take a look, let's zoom it for you so that you can see clearly. Here there was a spike, right? At this point there was a spike. Okay, so how do you understand when the spike is going to come into the market? How do we know that the spike would come into this market? This is, you observe the MACD and the moving average of oscillator. This line, this green line, is the moving average of oscillator. Okay, so if you take a look at this point, the moving average of oscillator ended here, which is the blue line, this green line. Let me zoom in. Here you can see the moving average of oscillator, it ended at this line, and there was another line here for the MACD that caused for a spike, which happened here. Some instance, there may be, this green line might be accurate, it might be the same, might be in the same place of this MACD here. Okay, might be the same place of this MACD here. This green line might be here, but as you can see here, it ended at this point, right? And you saw that at the first upward trend of the moving average of oscillator, the spike came into the market at the first upward trend, but the MACD was still showing a downward trend. Now, how do you know that the spike was going to come into the market? This is it. Okay, you zoom out a little bit, and when you saw that the moving average have started a downward trend, the moving average of oscillator have started a downward trend. All right, remember that this is still an upward trend of the MACD, and whenever there's an upward trend of the MACD, there's always a spike, right? You are supposed to be expecting multiple spikes on the market, right? Now what you do right here is to wait, okay, is to observe until the moving average have started creating a downward trend. And when you saw that the moving average has started creating a downward trend, then you wait, you observe. When you see that the moving average of oscillator, when the MACD has started creating a downward trend, you wait until when the MACD has started creating a downward trend. Then when you see the moving average of oscillator have started going upwards, just like this, it went towards the level of 10 and it started shortening upwards to create an upward trend, then you place a buy. All right, you place a buy when you notice that it has started creating an upward trend going upwards. You place a buy to catch the spike. All right, if you take a look at this point right here, this is an upward trend of the MACD. Now I'm not talking about scalping, we're talking about how to catch and avoid spikes. the moving average of oscillator started creating downward trend before the MACD, and we saw that it went upwards towards this direction already here, and the spike came into the market, and it was the last downward trend of the moving average of oscillator, but the MACD was still showing a downward trend. Now what you should understand here is that, let me zoom here so you can see clearly. What you should understand at this point is that right here, what you should understand is that you should only expect a spike when the MACD have started creating a downward trend, and when the moving average of oscillator have started shortening, started ending. All right, if you take a look at this point right here, the moving average of oscillator already touched the level of 10, and remember that when the moving average touched the level of 10, or when the MACD touched the level of 10, the spike will still come in. Okay, so this is what you need to watch out for. You do not need to wait until the last trend of the moving average of oscillator before you expect a spike, or before you avoid the spike. When the moving average of oscillator touch the level of 10, the spike will still come. Take a look at this point here. It touched the level of 10, right? But before the spike comes into the market, it took few candlesticks, right? It took probably about 20 to 30 candlesticks before the spike comes into the market. But at this point, you understand that if you take a look here, it already got to this point, right? To the level of 10 before it started retesting upwards. If you take a look, this moving average of oscillator is, the lines are big, right? Take a look here. The lines are quite small. All right, it's quite small, and the spike came into the market. So these are what you need to watch out for. You watch out for the level of how big and how small these trend lines are. Okay, you watch out for how big and how small these trend lines are, so that you'll be able to understand when the spike would come into the market and when to avoid the spike. And if you also go back here to this long trend right here, you see that this line, this moving average of oscillator line, was large, right? And also the downward trend of the MACD was also large as well. Take a look at that point. It was large. Okay, so how do you understand this? Now there may be an instance whereby you just enter into this market and the market's position would be like this. You just enter into the market position will be like this, and you will be wondering, when will the spike come into this market? When what you need to know is that you need to watch out when the moving average of oscillator have started going upward trend. Know that the spike would come into the market, because whenever the spike comes in, the moving average of oscillator will start creating an upward trend for a sell. I hope you understand what I've said to you guys. Now, you can catch spikes, you can avoid spikes like this. All right, you need to understand what I'm saying so that you'll be able to get it clearly. When the moving average of oscillator have started creating a downward trend together with the MACD needs to start creating a downward trend as well. Now, you do not wait until the MACD gets to this level of 10 before you avoid the spikes, even though that is also accurate, because you can see that at this point whereby the MACD gets to the level of 10, that was the last mark, that was the last moving average of oscillator line. Let's zoom in so that you can see. That was the last one. Take a look, the last line. Immediately get to the level of 10, that was the last line. And sometimes the MACD will not reach the level of 10, but this moving average of oscillator will end and the spike will come in, just as you saw here. Let's check another scenario so that you can see what I'm talking about. This is towards the upward trend of the MACD. We're talking about the downward trend of the MACD and the downward trend of the moving average of oscillator. Let's see what happened here. Perfect. This is what I'm talking about. You can see that the MACD did not even reach the level of 10. It was not at the level of 10 before it started creating an upward trend, and it got to a level of 10 at this point though before the spike came into the market, right? And the spike that came into the market was the last moving average of oscillator. So what I'm saying is that you do not need to wait until the last moving average of oscillator before you exit the market, so that the spike does not come for you, or before you place, you know, the buy to catch the spike. Because if you wait until the last moving average of oscillator, you might miss the spike. And if you wait until the last moving average of oscillator, the spike might catch you. So the reason I'm saying that you might miss the spike is because when you place a buy, then you are open to get spike, right? And if you place it at the last trend of the moving average of oscillator, you might miss the spike. So what you do right here is to observe if the moving average of oscillator have been creating a downward trend for a long period of time, then you immediately enter into the market for a buy so that you can quickly get the spike. But if you want to avoid the spike, all you need to do is to exit the market when you saw that the moving average have sold, the moving average have been creating a downward trend for a long period of time as well. Okay, also when there's an upward trend of the MACD, you know that why the chances of the spike coming into the market is very, you know, is very accurate, very much, right? But also you do not need to wait until you see another entry point whereby the MACD starts creating a downward trend and touch the level of 10 before you catch the spike. Also, when the moving average of oscillator touch the level of 10, you are still expecting the spike, even though it was the upward trend of the MACD. So using these two indicators together, you'll be able to see when the spike is coming and also how to avoid it perfectly, so that you can not end up blowing up your account and you end up making much profit from the market. So I hope you understand what I've shared with you guys on how to catch spikes on Boom 1000 index and how to also avoid spikes on Boom 1000 index as well. All right, so make sure you watch this video and understand everything that I've said, then you practice it very well, and so that you can understand it properly before getting into your reel. Okay, make sure that you practice the strategy and understand it very well before you use it. Okay, so if you found value, do well to like and subscribe to the channel, The Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.